YouTube, it's Tone back with another one for you. So this one here is the affidavit of Walker Todd, right? So this was the banker who worked for the Federal Reserve, came out and made a statement in court, wrote an affidavit. This is part of a case that actually took place. I don't know if it actually took place. You know how they get down with all these fake court cases and shit just to literally let you know things. You know what I'm saying? So this could have been one of those, right? So then they'll just put this out and then they'll fucking bury the case and be like, oh, look, we told them. They didn't find it. Well, you found it now. You know what I'm saying? So check it out. Let's get into this shit real quick. So in the last video, we were talking about how what they do when they supposedly loan you money and all that shit, and they switch it up on you in the contracts where they're lending you credit, but then they demand another species of currency for the actual transaction to be settled, which doesn't fucking make sense because if you lend me credit, supposedly, which you supposedly lend me credit, which they don't, okay, you lend it to yourself, really is what it is, because where would they get it from anyway? You know what I'm saying? So they get it from you. You lend it to yourself, but at that point they switch up the contracts on you and then make you obligated or make you feel obligated to pay them in another species of currency other than the one that they lent you, supposedly lent you, right? You do a forensic audit on that whole transaction, you're gonna find that that money ended up on the computer screen as soon as you sign on that dotted line. That shit didn't come from anywhere else. So number six, so legal tender, a related concept, but one that is economically inferior to lawful money. So lawful money being gold and silver, right? Because it allows payment in instruments that cannot be redeemed for gold and silver. So you can't redeem a bond for gold or silver and things like that too. Soon I'll be actually making bonds backed up in gold and silver. Okay, so that will actually hold a lot more weight than what these people are throwing around. They're just throwing around imaginary numbers. That's what it is. They're pulling shit out of their ass, pretty much. So because it allows payment in instruments that cannot be redeemed for gold and silver on demand has been the form of money of exchange commonly used in the United States since 1933. When domestic private gold transactions were suspended until 1974, I think they make reference to this. I think it was 1964. You're going to see down at the bottom. So basically, legal tender is whatever the government says it is. So you got to understand that the whole legal system is a private system that is voluntary in nature. I mean, they're not going to tell you that, but there's legal is not lawful. They're two different words, they're two different things. So legal is a private commercial system called the legal system, and they speak legalese there. They do not speak English, but it looks an awful lot like English, and they won't tell you that they're not speaking English. But ask them a language that they're fucking speaking in there. Okay, so basically, legal tender is whatever the government says that it is. The most common form of legal tender today is Federal Reserve notes, which by law cannot be redeemed for gold since 1934 or since 1964 for silver, see 31 USC. So no, I question the statement that Federal Reserve notes cannot be redeemed for silver. Since 1964, it was John who declared on March 5th, 1967, that after the 15th of June, 1967, the Federal Reserve notes would not be exchanged for silver, and the practice did not stop. And so, which is crazy because I don't understand how the fuck you can go buy gold with with that. You know what I'm saying? That shit is literally a fucking IOU, and people are taking that shit for actual tangible lawful money. That shit's ridiculous to me, to be honest. If we're being honest here, you know what I'm saying? So, mind blown, fucking mind blown. And I just figured out, I mean, I've been studying this shit for years, but to come to the realization of that and what people's understanding of money is, and the whole reason why they're trapping themselves in this system, and then they're constantly playing that shit out on fucking TV. You got the fuck is she called? The Secretary of the fucking Treasury playing this game on TV, acting like they don't know what the fuck to do. You guys know exactly what the fuck to do to fix this shit. You know what I'm saying? Get the fuck out of here with that. So, legal tender under the Uniform Commercial Code, UCC, Section 1-201, official comment, is a concept that sometimes surfaces in the case of this nature. The referenced official comments note that the definition of money is not limited to legal tender under the UCC, and it's not. I mean, you look at the IRS website, you're going to see anything could be money. You can monetize a letter. I mean, you can monetize a fucking napkin. You know what I'm saying? Like, that's really the game that we're all playing here right now, except you, which is fucking crazy. And I know for a fact that this shit is a fact because I fucking do the same thing. You know what I'm saying? So why the fuck wouldn't I? You know what I'm saying? So money is defined in section 1-201 as a medium of exchange authorized or adopted by a domestic or foreign government and includes a monetary unit of account established by intergovernmental organizations or by agreement between two or more nations, nations being the people. Okay, so the relevant official comment states that the test adopted is that of sanction of government, whether by authorization before issue or adoption afterward, which recognizes the circulating medium as part of the official currency of that government. The narrow view that money is limited to legal tender is rejected. Thus, I conclude that the UCC tends to validate the classical theoretical view of money. And it does. UCC does make it pretty goddamn clear. I mean, I use the UCC even though it's a private commercial system as well, but it is uniform. And I do appreciate the fact that it only allows things to take transactions to take place, with a contract, right? And then so UCC goes into detail as far as specifying what exactly entails a contract, a legally binding contract, and things of that nature. So I do actually appreciate it, and I do, once you understand this game, you feel comfortable swimming in maritime, then jump in by all means, because you're already doing it. You're already engaging in commerce and dealing with securities when you're dealing with Federal Reserve notes. You're already considered a private banker, and that's why they look at you like an asshole when you go into court and you're trying to pay these people with these things. Will they take them? Yeah. Will they actually demand them? Yeah. But can they? No. I mean, legally they cannot be demanding anything like that, but they will, and they'll fucking try it. So, and they do that dumb shit to have you and make you feel like you need to go work to go get some more green pieces of paper that say IOU on it, and then you're swinging around, and then you're picking it up and putting it against your head, taking pictures like you're rich, bro. You're holding a bunch of IOUs. That's what you need to know. You're looking like an asshole out here right now. All of you people who think you're fucking rich holding green pieces of paper, you're fucking retarded. So, how banks began to lend their own credit instead of real money. And they do that shit on purpose to make you look as stupid as you people look. So how banks began to lend their own credit instead of real money. In my opinion, the best sources of information on the origins and use of credit as money are in Alfred Marshall, Money, Credit, and Commerce, 249 to 251. And Charles, A Financial History of Western Europe, a synthesis of these sources as applied to the facts of the present cases as follows. As commercial banks and discount houses, the private bankers, that's what we do, right? You guys come in, you come into my business, you send me all your bills, and me as a private banker, I'm discounting all this shit. That's exactly what I'm doing with it. You know what I'm saying? These people are counting it, I'm discounting it. You know what I mean? And it's really that simple. You sign in to get into a fucking contract, you sign to get out. So it became established in parts of Europe, especially Great Britain and North America. By the mid-19th century, they commonly made loans to borrowers by extending their own credit to the borrowers or at the borrower's directions to third parties. The typical form of such extensions of credit was drafts or bills of exchange drawn upon themselves, claim on the credit of the drawees instead of the disbursements of bullion. Bullion would have been like pieces of gold and things like that. So gold coinage, gold bullets, maybe that people are melting together by mixing everything together in their backyard. You know what I'm saying? Things like that. So coin or other forms of currency in transactions with third parties, these drafts and bills came to serve most of the ordinary functions of money. The third parties had to determine for themselves whether such credit or money had value, and if so, how much. The Federal Reserve Act of 1913 was drafted with this model of commercial economy in mind and provided at least two mechanisms: the discount window and the open market trading desk, by which certain types of bankers' credits could be exchanged for Federal Reserve credits, which in turn would be withdrawn in lawful money. Credit at the Federal Reserve eventually became the principal form of monetary reserves of the commercial banking system, especially after the suspension of domestic transactions in gold in 1933. Now, mind you, when they went ahead and made that declaration in 1933, where they rescinded the gold clause, what happened essentially was that people didn't understand what the word persons meant. And you look at USC 26, and you look at the definition of person, you're going to see individual, corporations, and things of that nature. It is not a tangible living person. More so, it is a corporation that they were making reference to, not you. Okay? So thus, credit money is not alien to the current official monetary system. It is just rarely used as a device for the creation of Federal Reserve credit and that in turn, in the form of either Federal Reserve notes or banks deposits at Federal Reserve banks, functions as money in the current monetary system. What they're saying there is that, credit being money is that you can issue bonds, promissory notes, and things like that to the bank, right? You're gonna have to deal with the private side of the bank, maybe the TTL department, and you're gonna issue them promissory notes, and they're gonna deposit that as if it was a Federal Reserve note, and then they'll exchange it for Federal Reserve credits, which is just numbers in a computer. It's fucking digital money. Like, it already is digital. I don't know what you guys are scared of digital money for. It already is. Literally already is. So the Federal Reserve notes just represent digital currency that's in a computer. That's what it is. It's not backed by gold. It's not backed by shit. It's literally people creating bonds, putting that shit into their fucking account and typing it into the computer. All right? This is what these motherfuckers are doing. So, and I mean, I know that because that's what I do. I do the same thing. You fucking think I'm not going to do that too? Come on. Get the fuck out of here. So, in fact, a means by which the Federal Reserve expands the money. And so this is what they're doing. So it doesn't hurt the nation or the economy to issue bonds and things like that and get the credit in a digital form and then use it as such. It does hurt the economy when you start pulling it out in Federal Reserve notes and using it like that, because it literally costs us $10 for every one that you use. That's what it is. So it doesn't hurt the economy to go ahead and deposit $1 million promissory note and then use it as such with just a digital card and things like that. You're really not fucking nothing up. And every time you discharge a debt and things like that, you're literally, you're taking out $10 for every $1 you knock out. That's what we're doing right now. So these people are making the debt worse. I'm making it, I'm doing my part, and I'm eating off it. So every debt I discharge, I deposit the same into my trust account as well. So, you being a banker, you can 10 times any instrument that you come into contact with. So if you get a $1 bill, you can turn that into 10. So when somebody sends me a $1,000 bill, literally I can turn that into a $10,000 deposit into my own trust and discharge it at the same time. I don't even go that far, but I may start doing that. You know what I'm saying? Like, these are all options that you have as well, being a private banker, which you already are. So let's get into this next thing right here. So supposedly, loosely defined, is to set banks' reserves requirements, currently usually 10% of the demand liabilities. So at levels that would encourage banks to extend new credit to borrowers on their own books that third parties would have to present to the same banks for redemption, thus leading to an expansion of bank-created credit money in the modern economy. Many non-bank providers of credit also extend book credit to their customers without previously setting aside an equivalent amount of monetary reserves. And so, I mean, if they ever ask you for your social security number or something like that, they're not giving you shit. You're giving it to to yourself, because they wouldn't need your social or any of that information if they were actually giving you their own credit. Think about that. So credit card lines of access, checks issued by non-banks, are a good example of this type of credit, which also causes an expansion of the aggregate quantity of credit money. The discussion of money taken from the Federal Reserve and other modern sources in paragraph 11 is consistent with the account of the origin of the use of bank credit as money in this paragraph. And bank money is just going to be them typing fucking numbers into a computer, which is what they do. That's what they do. And that's exactly what they do. So, advances of bank credit as the equivalent of money. Plaintiff apparently asserts that the defendant signed a promise to pay, such as notes or credit applications, collectively the note, in exchange for the plaintiff's advance of funds, credit, or some type of money to or on behalf of the defendant. However, the bookkeeping entries required by the application of GAAP, general accepted accounting practices, and the Federal Reserve's own writing should trigger close scrutiny of plaintiff's apparent assertions that it lent its funds, credit, or money to or on behalf of the defendants, thereby causing them to owe the plaintiff $400,000. According to the bookkeeping entries shown or otherwise described to me in application of GAAP, the defendants allegedly were to tender some form of money, lawful money of the United States of America, as the type of money explicitly called for in the note. Which is crazy because, if they give you legal tender, which is just basically credit, they cannot demand lawful money in that. Basically, they can't tell you to pay them in gold if they gave you credit. So securities or other capital equivalent to money, funds, credit, or something else of value in exchange, money of exchange, loosely defined, closely referred to herein as money to repay. So, when you see what it is that's going on, and then, so they have so many opportunities at any point to just, commit fraud and all this dumb shit that they do because, all that they're doing, they can have their stupid little buddies come in with a $1 billion bond, bring it in, get the fucking deposit, and immediately type fucking numbers into a computer. You know what I'm saying? Then they can start lending out that money and doing all types of crazy shit with it, which is what the fuck they do. A lot of fraud going on there. You know what I'm saying? And they're gonna do that. Then maybe it wasn't even a real person that fucking gave them the bond. You know what I'm saying? Ooh, or they can fucking give them a fake death or something crazy like that, right? Ooh. So if you find out that it was a guy who gave us a fake fucking bond, but we can't find him, he died and shit, right? Something stupid like that. This is the game that they fucking play, and there's big money involved, so you can see why it is what it is. I mean, I do think it's funny as fuck, to be honest with you, but I operate more on a ethical basis, right? And that because that's my personal choice. I don't believe in good and bad or any of that, but I do believe in energy, frequency, and vibration, and you do get what you put out. So, I mean, if you look at my life now, putting out some amazing shit, helping a lot of people, and I really do appreciate all the positive feedback that you guys give me and all that shit that helps me keep going. And shout out to all of my customers, everybody that's even on the channel and has the fucking balls to stand up and do this shit, because it really does take a certain type of person, and this shit is not for everybody. So, it is a game of chess. Stop playing checkers with these clowns. That's what I got for you for now. Until we meet again.